This is the American Advisor Precious Metals Week in Review.
Hello, ladies and gentlemen. This is Joe Battaglia bringing you the American Advisor Week in Review, sponsored by Goldline. If you'd like to learn more about investing in precious metals, give them a call at 877-346-2646 or visit them online at goldline.com. Be sure you ask them about their special price guarantee programs. Something like that might work for you. Currently, it is Friday, May 1st at 7 a.m. Pacific Time. Gold is trading down $10.90 at $11.7410. Silver down 8 cents at $16.13. Platinum down $11 at $11.36, and palladium down 6 at $7.76. Currently, the Dow is up 120 points at 17,960. The NASDAQ up 39 at 4981, and the S&P 500 up 12 at 2,098. After yesterday's sell-off, gold tried to rally back today but failed, prompting traders to sell it off again this morning for the biggest decline in 8 weeks. Expectations of an improving job market and consumer spending, along with improved manufacturing, plus the increase in 10-year yields to 2.11%, all affected gold. The new claims for unemployment report we saw yesterday showed that those making new claims fell 34,000 for the week ending April 25th, and this shows the lowest level of unemployed since April of 2000. That's quite an improvement, and everyone is kind of expecting the Fed may react to that by allowing rates to start rising. The metals experienced another volatile week in general, with the big gains and big losses as well. Most of the volatility centered around speculations about what the Fed will do with interest rates. In their latest report, they removed all references to a time frame for raising rates. This led to some analysts claiming that the rate hikes are on hold, while others contend it means a hike is imminent. As a result, gold and equities fluctuated in a pretty wide range over the course of the week. The dollar has been on a great bull run, not because it has good fundamentals, but because it is better than other choices. However, the fundamentals of huge debt and negative real interest rates mean that sooner or later the dollar will fall. Since March 12th, the dollar has fallen 3%. In the same time frame, gold rose almost 5% before this week's pullback. One well-known trader took a very large position in gold this week on the expectation of a large up move ahead, according to Stacy Gilbert of Susquehanna Trading. Bloomberg News reported that Saudi Arabia is burning through its reserves, which are mostly dollars, at a record pace. If they lack the resources to provide the generous benefits to their masses, we could see another revolution in the Middle East. This would have negative consequences for the dollar. Another reason gold fell on Thursday and today was that Greece is signaling concessions in its negotiations with its lenders, and the expectation today, at least, is that they will reach a deal and there won't be a Greek default. Many analysts are showing a concern about negative interest rates on government bonds all over the world. Sooner or later, these bubbles burst, and that's when gold will prove its worth, as it has done so many times in history. Moreover, the Chinese equity bubble could make an impact on other stock markets, currencies, and gold. The extensive news about a Chinese currency reset, which may make the yuan competitive with the dollar, could also be an event with shock value. We know that there's been a massive transfer of gold from Western nations, especially the U.S., to China, India, and Asia in general. If James Turk is correct, the dollar will face serious trouble this year. If the dollar falls significantly, gold could soar. Even Jim Cramer is urging all investors to own some gold for protection. And I think that that's a wise decision, and it's something that we all should be bearing in mind. As Kramer has said, you don't worry about whether or not you are making money on an insurance policy, because we all know that insurance costs you something. It doesn't make you something. And that's what gold is basically for, is to protect against the type of crisis that would be very devastating to an equity portfolio or to a currency and bond portfolio. So that's the reason why a small diversification makes a great deal of sense for pretty much everybody. Now, if you'd like to learn more about that, give Goldline a call at 877-346-2646 or visit them online at goldline.com. Be sure to read Goldline's risk disclosure booklet, Coin Facts for Investors to Consider. Don't make an investment unless you are thoroughly you have thoroughly read and fully understand all of the materials contained in that disclosure booklet, and be certain that that you make decisions that are right for you, because everybody has different needs and tolerances. So give them a call, discuss those issues, and take it from there. The number again is 877-346-2646. Until next week at this same time, this is Joe Battaglia. I hope you have a great weekend and a wonderful week ahead.
The American Advisor is brought to you every weekday by Goldline International, one of the largest precious metals dealers in the United States. Over the last 50 years, Goldline has been helping clients acquire billions of dollars worth of gold and silver. Prior to making a purchase with Goldline, you should review Goldline's account agreement along with their risk disclosure booklet, Coin Facts for Investors and Collectors to Consider. You may request copies by calling 877-346-2646 or review them online at goldline.com. All investments involve risk, and coins, currency, and bullion are no exception. Precious metals prices may rise or fall over time. Past performance does not guarantee future results. Goldline recommends that precious metals and rare coins be held for a minimum of 3 to 5 years. Contact Goldline today for more information at 877-346-2646 or visit goldline.com.